This is Edmund Lee, and I'm hanging out today on Google with Eric Smith from Smarter Money Now, who's another member of our extra digit community, if you will. Basically, these hangouts that we're going to be doing are going to be about financial principles and strategies and information that can help anyone. We are going to start today with the W-4. Okay, 80% of Americans are filling their W-4 out incorrectly, which means they're overpaying in taxes every single month, which is money they could be using. Now, this is from the IRS, okay? That's where I got that statistic from. But also, the IRS is stating that you could be putting your money in other places outside of giving it to them. I'm going to just talk a little bit about what the W-4 is, and then I'm going to bring Eric on to kind of go line by line and explain exactly how to fill out a W-4 and some things you may or may not know about it. So let's start at the origin. Let's think about it. What is a W-4? Why does it exist? And how does it affect you? Okay. W-4, if you're not familiar, is that form you filled out. You could have filled it out a month ago, a year ago when you first started, or you may have filled it out 5 or 10 years ago before you may have got married, had children, etc. And it may be sitting at the same way that it was before. The IRS states that you should fill your W-4 out every single year. And it usually changes a little bit as far as the numbers every year or two. So what it is, it's a form that you give to the government, to the IRS, not the government, you give to the IRS, and you tell them exactly how much money per check you would like them to take out. Now, you don't do that by exact numbers. You do that by filling out the form, and they calculate pretty much how much they're going to take out based on the exemptions you have, based on the tax credits, and also based on the type of dependents, etc. So let me just put that in layman's terms. The IRS is going to take out X amount of dollars from your check for you to owe taxes. If you're an employee, you're W-2, you're going to have a W-4. You're going to pay about 30 to 35% of your income is going to get taken out in taxes up front. Well, when you tell them, say, hey, look, I have certain things that I want to pay for monthly, and the government, the IRS says, well, okay, we'll give you more of your money so you can handle those obligations, like dependents, child care, disabled individuals, even things like student loans. And you think, well, why would they give me my money back? Well, because they want you to pay those things. You got to think, child care is related to nonprofit, and that money goes to them. Student loans goes to them. So these are things that they want you to actually use. But what we show you how to do is how to take that information and change it, get more cash flow in your house, knock out your debt, knock out your all of your consumer debt basically, and even your mortgage and car note if you so choose to, as well as get started in some type of home-based business. And Eric is going to dive into why being in a home-based business will help you not only on your W-4 but just in taxes in general. So Eric, how you doing over there in Tulsa?
You know, I'm doing outstanding, Edmund. I appreciate this opportunity to sit and chat with you this morning. You know, financial things are some of my most favorite topics. As I continue to learn, I love sharing this information to other people because it's actually kind of selfish. The more I share and teach, the more it gets into my heart, and my belief system is higher. So the reasons I've had home-based businesses are continually grilled inside of me because of the benefits that I get. But I like helping other people as well. So it's not all selfish.
Well, I appreciate that. Yay, Eric. I love this Google Hangout thing, man. It's so sweet.
Oh,
So,
man. I was thinking about putting my pirate hat on and everything and just getting my own effects going. But this W-4 matter is a pretty serious matter. So we're going to keep it lively and fun, but I'll leave the effects off today.
all right. So let's dive into it. So what I want to do is, if you could bring up the W-4 for 2013. I
Okay, I'll
want.
do that. What I want to first say something too
Okay.
is we want people to remember that the W-4 form is a form that they fill out and turn in to their employer. And their employer is the one that controls what's taken out of their check and what's sent in to the IRS and so forth. And one of the other caveats that we're going to be talking about, getting deeper into this W-4, listen very carefully to some of these points that we're going to discuss, is why the IRS really want individuals to better take care of their personal finance. You see, unfortunately, we live in a society that we're surrounded by the media and social media and opinions of other people. And sometimes these opinions are so far off base. I know I've heard several individuals say, well, my CPA recommended if I want to get a bigger tax return that I should take more money out or have them withhold more money. And oh my goodness, this kind of advice just, it kills me to hear people say that. Because, I mean, you know how I feel about this, Edmund. I mean, it's your money. You go to work, and why would you even want to have a tax refund? Well, the IRS addressed that in a letter in 2005 where they said a lot of people use the refund as a forced savings plan, and they did not recommend it. So when the IRS is not recommending that you use them as a savings plan, they say, we will not pay you any interest for holding your money all year long. Why not get some interest somewhere else? So anyway, I don't want to get on
No, I want to comment on that. One thing about that is I know what people are thinking. They're saying, well, man, this is what my mom taught me, or this is what my dad taught me, or this is what my CPA taught me. And what I want to share with you about that, a wise man and very financially well-off person always told me, he said, Ed, only everybody can give their opinion, but only people with results and a track record can give, in the industry that you want and the results that you want, can give you counsel. So basically what he was saying was, just because a person is a CPA, if they don't have the lifestyle or they don't have the financial results that you're looking for, they may not be giving you the best advice, even though they have a degree and they went to school. A lot of times our mentors and our advisors are those that are not giving us the best options or all of the options. At the end of the day, it's your money. You want to decide what you want to do. You have the freedom to do so. You worked for it. However, what we're going to do is show you some options that may work better for you if you're trying to create financial freedom, an investment account, or you have children that you want to look after in a better fiscal or in a different fiscal way. I won't even get into better or worse because I don't want this to be a debate. I just want you to know, because I didn't know. I will tell you, I have a master's in business, and I didn't know this stuff. You would think that they would teach us this or somewhere in there. Nope, not at all. So that's one of the things I wanted to make sure we got on. And then the second thing I want to talk about is we understand that a lot of people did not get the financial IQ that they should have received. They don't teach this stuff in school. So what we want to show you is, where can you put this? People say, okay, if I get my money monthly, I'm just going to blow it, or I don't know where to put it, or I'll save it, which is not the smartest thing to do. You want to invest it to outgrow inflation. And that's what we do. We show people, hey, now that you got this extra income, what do you do with it? So Eric, let's I can see the screen. If you can zoom in a little bit more to where we get to the personal allowances. Yeah, I think we can see that a little bit better. Oh yeah, that's a lot better. If we can go one more time, let's see if what that does. So, ladies and gentlemen, we're about to go line by line through the W4. Yeah, that's perfect. So, Eric, I'm going to just kind of ask the questions, and we'll just kind of go through each one. So, letter A, can just kind of go through them, and I'm going to ask the devil advocate questions. So, just go ahead and go through each line, and I'll ask any questions that I have.
All right. So, I'm going to start with the single individual, because most people, when I ask them a question just random, on your W-4, how do you have your W-4 filled out? And they say, I always claim single and zero. And if you read the W-4, which is what we're going to do, but if you read it, you will see that the IRS really, they're not about trying to take all your money. They're just simply collection agencies for Congress that has passed certain laws. But if you just simply read it, you will see you can have more money each month in your paycheck just by what the form allows you to do. So line A says enter 1 for yourself if no one else claims you as a dependent. I mean, if you're a grown man or a woman living on your own and your mom and dad don't claim you anymore on their taxes, you should have at least single and 1. Now, line B says enter 1
So
if,
hold on, Eric.
okay,
Dependent. Where can I find, or is there a way I can find out what the definition of a dependent is?
well, as far as the definition of a dependent, you're looking at someone that depends on, you depend on someone for caring for you, or someone depends on you for caring for them and taking care of their life's necessities.
Right.
Pretty much.
And they're claiming you on their taxes.
And they're claiming you on their taxes.
That's the major kicker. Is if someone is claiming you on your taxes, then you definitely put a zero here. But if you have a job and you're over the age of uh, either 18 and or 26, if you're in college, I believe it's 24 to 26, somewhere in there, then nobody's pretty much claiming you. So okay, well let's go to B.
Enter 1 if you're single and have only one job.
Self-explanatory.
So right there, a single person should be claiming single and 0, single and 2, not single and 0. Or if you're married, have only one job and your spouse doesn't work. So if you are a husband and your wife is at home, or if you're a wife and your husband is at home, either or, you should put 1 there if your spouse does not work. And your wages from a second job or your spouse's wages or total of both are $1,500 or less. So even if you have a second job and you don't make any more than $1,500 a year, then you're going to put a 1 in line B.
Okay. So when he's saying single and 2, he's meaning A is 1, B is 1. So you have a total of 2 just from A and B.
At this point.
At this point.
So far.
So let's go to C.
Enter 1 for your spouse, but you may enter 0 if you're married and have either working spouse or more than one job. Entering 0 may help you avoid having too little tax withheld. Pretty self-explanatory.
Now here's one that gets people here. Some people get afraid of that entering 0 may help you avoid having too little tax withheld. Do not be afraid of that statement. Okay, I've helped people, plenty of people fill out their W-4s, and they're like, I'm just going to 0 because I want to avoid anything. And that's a very powerful language used in that area. But and you say you may choose to enter 0 if you are married. Look, if you have an opportunity to claim 1 and it is ethical and it fits and it applies, claim it so that you can use your money to your best advantage. Don't claim it if it doesn't apply to you. But if you may want to claim it. I won't tell you what to do and how to fill your form out, but you may want to claim it so that you get more and you're able to use that for debt reduction and or investing. So let's go into what's that, D?
Enter number of dependents other than your spouse or yourself you would claim on your tax return. That's pretty self-explanatory. Who else are you claiming? Children, nieces, nephews, or whomever are dependents under your care.
Okay. So enter dependents other than your spouse, yourself, you would claim on your tax return. Okay. And one good form to have when doing your W-4 is to have your tax return with by your side, and maybe even the W-4 that you already filled out if you don't know how you filled it out, just so you can compare. I've seen people use those, and it really gave them some good information to fill out. So let's go on to E.
Enter 1 if you file as head of household on your tax return. See conditions under head of household above. So you go right up here, they give you a definition section. And head of household. Generally, you can claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or other qualifying individuals. So then if you have further questions about that, go to IRS Publication 501, irs.gov, Publication 501, Exemption Standard Deduction, Filing Information for information.
Eric, I want to comment on that. I would say that every United States citizen should look at Pub 501 and really, and I used to look at taxes. Oh, so and so does my taxes, and really didn't look at this stuff. But to be honest, it's one of the most important documents that we have, and taxes are guaranteed in this country and in capitalism. So if you want to succeed, one thing they asked Bill Gates when he got all this wealth, they said, what is the number one thing you learned as being a multi-billionaire? He said the United States taxes system inside and out. Um, and that's very important, people. And if you really want to control your finances, I suggest you look at 501, 505, and a couple other publications. Because once you learn this, you got it. It's not confusing anymore, and then you can teach your family about it, because they will have to fill this form out in the future if they ever get a job. So it's best if they really understand it. So um, keep going. I just want to really state that. So E, okay, so head of household. Well, we just went over that. So we're on now what, F, Eric?
Yes, enter one if you have at least 1,900 of child or dependent care expenses for which you plan to claim a credit. Do not include child support payments. See publication 503, child independent daycare, child independent care expenses for details.
Okay. So that'll let you know, that publication will let you know what is classified as a child and what is classified as dependent care. You definitely want to go look at that, and you'll see exactly if you qualify or not.
G, tax child credit. Wow, child tax credit, excuse me. Including additional child tax credit. There it tells you the publication to see for more information. But then it breaks down. If your total income will be less than $65,000, $95,000 if married, enter 2 for each eligible child, then less 1 if you have 3 to 6 eligible children or less. 2 if you have 7 or more eligible children. If your total income will be between $65,000 and $84,000, $95,000 to $119,000 if married, enter 1 for each eligible child.
Okay. So right here, I had someone one time tell me, man, I don't have time to figure this out. I don't have time to read publication 972 and figure all this stuff out. I just want to go to work and do my thing. I don't want to fill this thing out different. And he was expecting me to, like, kind of have a rebuttal, and I didn't. My thing was, it that's on you. That's your choice. Again, I want you guys to know you have the freedom of choice. But if you want financial freedom, you might want to put a little time and energy into learning this. And really, uh, the type of people that we're usually dealing with are those ones that are saying, "Hey, I'm tired of them taking out more than I need to. I'm tired of not having what I need at the end of the month, and having to borrow and pay one bill and not pay another, or not have enough money just to take my kids to a nice dinner, or take my wife out sometimes, or even treat myself to something. I'm tired of living where I'm overspending, and I want to change, and I'm willing to do what it takes." Those are individuals that will take this document, read what they need to read, and go for it. So those are individuals that really get the most out of not only this, but the rest of the stuff we're going to teach.
Well, you're absolutely right, Edmund. And, even the people that are going to finish this video and this training are, are the folks you just described. But, what I have to say to that, if someone asked me that same question, I would probably answer the way you did and say, well, it's your money, and, if that's all the time you have is to go work 40 hours or 70 hours a week, building someone else's company or making someone else rich and a millionaire or a multi-billionaire, that is your choice. And if you have children, that is the future choice of robbing, that is the choice you're making of robbing their financial education future. It is your money. And if you can't spend 30 minutes or an hour to potentially put back into your own pocket literally tens of thousands of dollars, it probably explains why that person is in a financial situation that they're in. And that's not to be negative, that's just simply being factual. And so many times our priorities are so misaligned, and it's unfortunate.
Yeah, that's their disclaimer. So let's go to H. Then let's
H is pretty simple.
let's rock it out.
Add
Yeah.
lines A through G. And you put that number there. Now, for accuracy, I like this. it wasn't up until 3 months ago when I joined my econ 2 months ago, excuse me, I didn't even realize a W-2 had a page two. I mean, a W-4 had a page two.
Right.
When I worked in corporate America, all I did was fill out this one little section here and the bottom section here and turned it in. And all those years, I worked a home business, and I did not know that there was a page two on the W-4.
Well, I'm gonna share a little bit of why the psychology. See, I like to get into psychology, and I get to get into language. And there's a lot of language going on this page. I didn't talk about it up early in the earlier parts, but I believe one of the reasons people don't go to the second page is look at that for accuracy. Complete all worksheets that apply in bold. Okay. Um, we don't know if it applies to me. So if I don't know what applies, see, the thing, a confused mind is a paralyzed mind. They just won't act. So I don't know if it applies to me. So I'll just kind of disregard that. And I read the first part. If you plan, oh no, right where you were. Oh, I see it. It's still up there. That's fine. It's up at the top where I'm reading. If you plan to itemize or claim adjustments to income, if you don't understand the itemize, you don't know where they're talking about itemizing, you're like, I don't plan. I haven't had a plan. I just fill this thing out because I just got a job. So that word plan can throw people off because no, I didn't plan to itemize. I don't even know what that is. So I'm going to skip that. And then I might look at the odds of you or the percentage of you looking at the second one. Maybe, maybe not. If you're single, you have more than one job, or married, and your spouse both work, you're like, I don't have more than one job, and that doesn't apply to me. I don't do two earners. If neither, stop here. Okay, I'm gonna stop here. All right, that I believe is what happens because people don't understand that the itemized are talking about different. Well, let's go down. We're going to get into what itemized or claim adjustments to income, what those are on page 2. So you would fill out the rest of these are pretty simple. That area right there, you just pretty much put the information. So Eric, could you explain what planning to itemize deductions and claiming certain credits or adjustments to income? What in the hell does that mean?
That's a fantastic question. Planning, looking ahead. Now, this is from a My Econ set of eyes. Because what My Econ does for helping individuals, number one, is to help them maximize cash flow. In order to maximize cash flow, you've got to have a plan set up in place. And in setting up that plan, part of it is looking at all of your expenses. Most of the time, when we think about our expenses, it's always take-home pay, and then we create a budget around the take-home pay, or that's commonly known as net income. You work, you may be getting paid $20 an hour, you work 40 hours a week, and you got paid $800. And then you bring home $600. So most people fill out their budget and deal with their bills based on around $600. In creating a plan, you need to look at the gross income. What happened to that $200 or even perhaps $300 and your take home was $500? What happened to that other $300? Most of the time we overlook that because we just assume it's something that has to happen. Everybody has to pay X amount of dollars in taxes, and we do not understand the separate rules that the IRS has for business owners. Most people, 114 million Americans, participate in the rules of the W-2 employee. And that simply means you go to work and you pay upwards of a third of your income in taxes, which means you're the highest in the highest tax bracket or pay the highest percentage of your income of all Americans. When you're a business owner, then you start tapping into a whole nother set of rules, and that's where planning comes in, because now you have to start looking at itemizing all these deductions. And particularly when we get to line 4, I'll break down some deductions that you need to be looking at so that you can plan ahead, put that into your worksheet here. Therefore, that amount of projection is not taken out in taxes in your paycheck throughout the year, and you wind up keeping more money.
So Eric, I want to make sure I clarify this for people. Some people may be listening. You might be thinking, well, I'm not a business type of person. I'm a nurse, or I'm a lawyer, or I'm an accountant, or I just I work on cars. I work at Walmart. I'm not a business-minded person. I don't really care about sales. I hate selling. Okay, 95% of the world doesn't like selling. Okay, only 5% likes it. Only 2% are any good at it. So what he's saying, he's not saying become a salesperson or become a corporation or a big business, anything like that, or get into being a business owner in the sense you may be thinking. There are a lot of home-based businesses, and I'm not going to say that you need to be involved with my econ or anything we're doing. You can be selling cookies, or I don't care what you do. Anything from home can be classified as a business owner. But let's talk about what the IRS says you need in order to be classified as a business owner in their eyes. In their eyes, you need to work on it anywhere between 3 to 4 hours a week, and you want to have, and now we say work on it, that's webinars, that's training. Like right now, this is about an hour. So me and Eric are getting an hour, quote unquote, of our business time. Reading, marketing, having lunches, dinners, things you're already doing. You have lunch and dinners with people, meeting people, networking. These are things you're already doing, even traveling to your locations. So these are things that you're already doing, and you can put a home-based business inside of your daily operations, which will qualify your 3 to 4 business. The second thing that the IRS says is you must have an intent to make a profit. That doesn't mean you have to be profitable. To be honest, most businesses are not profitable when they first start for the first several years. But as a home-based business owner, you can be profitable soon. You don't necessarily have to go through not being profitable soon, but you just have to have an intent. One reason why we chose my econ is because we're our own customer. Just from using our cashback mall and some of the other things that we have, that shows that we're intent to make a profit. That shows that we're actually creating revenue, and it allows us to use write-offs, not only just exemptions and itemizing. So you can leverage other people's businesses, and you don't have to go and do a capital raise and start a business and get a storefront. That's not what we're talking about. We're talking about what you have going right now, adding for, most of these companies that are home-based business, you can join anywhere from $25 all the way to about $500. So that's what we're talking about as far as being a home-based business owner.
Well, and I want to just add to that, Edmund. One of the things you said, that one of the biggest challenges that a lot of folks have is the idea of sales. Now, the idea of sales is simply, I have something, I have this envelope, and I want you to buy this envelope, and I'm gonna do whatever it takes to get you to think that this envelope is the best thing since sliced bread, and you to buy it. That's not always about sales, because you have to think about, on your job, even if you're a W-2 employee, you've got to sell that employer on the idea that you are the best person to be hired to execute that position, whether you're a nurse, whether you're a firefighter, whether you're a police officer, a CPA, lawyer, some of the things you mentioned. You're in sales. You've got to sell yourself. And so with the same aspect, if nothing is purchased and if nothing is offered, the economy comes to a standstill. That's one of the reasons why the IRS has all of these provisions for business owners, and this is why we're going to go through this page too, because when you take advantage of all of this stuff, my goodness, the economy is stimulated, and if you lose a job, if you walk into your job tomorrow and you've given a pink slip and you've got a home-based business already fired up at the house, you're not completely sweating the fact that you're not employed anymore. And the IRS appreciates and wants you to take advantage of this because you then don't have to go and rely on the unemployment, which is kind of a drain on the economy of the state. So your home-based business then throws more fuel to the fire of the economy and builds everyone up.
Yeah, it's good stuff. So you put it up the second page?
Yeah, I'm gonna get that
Okay.
back up here.
So while you're doing that, yeah, just the last part before we go into the deductions. I like to tell people, I do a lot of sales trainings for different companies, and I tell people, don't even look at it as sales. Let's just omit that word because it's just that a lot of people have negative energy with that word. So just think about helping people and allowing them the ability to take advantage of an offer that can help them and their family. And if you're in integrity, you won't have a problem sharing things because you're sharing it for the right reason. You won't have a problem sharing a great movie with somebody, knowing that they're going to pay $50,000 to go to the movie nowadays, but you know they're going to get a good experience. So that's what we like to see. We like to give people experiences that have helped them, and then teach them how to share that with other people that are looking for that type of experience. And that's pretty much what we do. Bob Proctor says it best. He says the number one key to sales is finding out what a person wants and deserves and give it to them. So let's go ahead and we're going to give you guys, because you deserve to know this second sheets and how this breaks down. So let's go ahead and break this down, Eric. Let's start with number one.
All right, you're going to use this worksheet only if you plan to itemize deductions or claim certain credits or adjustments to income.
Explain those, Eric. Before we get to that, what is an itemized deduction, claim credit, or adjustment to an income?
Well, an itemized deduction is going to be, well, it's telling you here, like number one,
okay.
Enter an estimate of your 2013 itemized deductions. These include qualifying home mortgage interest. So you have to look at your previous year. When you go to file your taxes, you look at, your tax preparer is going to say, okay, you made this much money, and it's going to go on a statement. You made $100,000. Now, let's start looking at all the deductions, line by line. The IRS allows you to deduct the interest you paid on the borrowed portion of your mortgage. So you may have a mortgage payment of $1,000 a month. First year into your mortgage, most of that's going to be interest, so you've got $12,000 in deduction. So let's just say $10,000 for sake of being fair. So now your income is reduced down to $90,000. We believe in giving, a nice donation to our congregation, and we donated $5,000, $10,000, $15,000 each year. So whatever that was. So let's say another $10,000. So now your income is down to $80,000. Medical expenses, taxes, and so forth. So you can reduce your income now down to $70,000, and so on and so on.
So these aren't these
and home-based business expenses. Sorry, I forgot to mention that.
Okay.
Which I'm going to get into later.
So are these are located, the estimates from the year before, are these located under what, their 1040 or their tax return? Don't they have a list of these things?
Well, they're going to use their Schedule C's, the Schedule C form on their previous year.
Which is a 1040, right?
Yes.
Okay. All right. So if you guys can find that, and if you don't understand,
well, it's not. There's not the easy 1040 form, but it's going to be more the itemized deductions portion of that form.
Okay. All righty. Now, there's some changes that we have in 2013. If you look at a 2012 W4, it didn't have, it wasn't 10%, and it was 7.5% pretty much for anyone. Now, they've changed it to you have to be born, you or your spouse have to be born before 1949. If you can see that, then you can also see that they actually changed the married or filing jointly or qualifying widower. That was added recently. And then your head of household. So you just want to look at that and really read it. And also you see publication 505 that will give you details. So Eric, let's use an example. You said we're going to use about how much you want to say we?
I'm just going to put up here $10,000.
Okay.
Just as an example. Okay. On line 1.
Okay.
And then as I move to line 2, it tells you pretty simple there. If you are married, put that number. If you're Head of household, put that number. If you're single and married filing separately, put that number. So I'm just going to put 6,100.
Well, actually, let's do this. Let's put the 8950 because I want to go back up, and then we're going to put the we're going to make this person the head of household up top too. And if they're head of household, they're probably going to be more than 10,000. But we can keep it there. We can keep it right there. I just want to do a conservative.
Yeah, every time when I do this this form, especially when I'm working with new business owners and so forth, that's the reason why I'm helping a person adjust their W-4. I try to be very conservative in all of my estimations. Now, I mean, that line 1, that's going to be information from the previous. I mean, it is going to be an estimate of some of the deductions that they're planning on getting. But if they use the previous year's taxes, it gives you a good idea of what that is. So, I go through some of their questions, but you don't know. Again, it says estimate. I don't know what these numbers are actually going to be. Right. So that's why I try to be very conservative in my estimations.
Okay. All right. So let's go to 3.
And then it says subtract line 1 from line 2. So that's going to be, is that $150?
Yeah. Now, I guess for example purpose, you know what? The example purpose, you think we should use 6,100 so people can see?
Yeah, that's why I was doing the 61.
Okay, yeah, go ahead. I got you. All right, I see. I'm see. You're the professional here. Let me just sit back and relax. So that's
now we got $3,900 there.
Okay, which later as we go down, you'll see that that's one exemption in itself right there.
So, estimate of your 2013 adjustments. This is a real big one here. This one I really like to have fun with. And this is the power of why a person should really focus on having a home-based business. I was talking to a young man last night that drives. He said his drive to work from his home is about 30 to 40 miles a day. Then he has to come back home. I mean, it's 30 to 40 miles one way. Let me clarify that. Then he has to come back. So he drives 70 to 80 miles a day. So I share with him. It says, according to, if you had a home business and you were using those miles at that time to go to work to stop and market your business, maybe handing out flyers or stopping at a local convenience store or a grocery store or a coffee shop, putting up some information that you're going to be, there's going to be a Google Hangout or there's going to be a webinar or a conference call or a live event, whatever. You're using those miles to go to that location. And so we estimated 70 miles a day times 5 days a week times 52 weeks out of the year. We're not giving them a vacation, but we just figured 18,000 miles. I said if you just used half of those miles, and the IRS gives you, according to the most recent mileage figures, 55.5 cents a mile, that totaled up to $4,995 in deductions just from mileage. I said that's only using half the miles that you're driving to work. And you use your vehicle for other stuff besides going to work. And that's not even including your wife. So, and then what I helped him understand is I asked him how much does he pay in rent? And he pays $1,000 plus a month. I said that's $12,000 a year. And how big is your place you're renting? So you've got a 2-bedroom apartment, you've got a living room, kitchen. Let's say you did monthly events where you invited people over and they were exposed to MyEcon or whatever your home-based business is. And that's the key. It's not just about MyEcon. We like for you to use the tools that MyEcon has for all your tracking purposes to support your home business, but some sort of business. I said, now let's say that living room and kitchen represents a third of the living space of that home. You divide that $12,000 in a third, and you've got another $4,000+ in deductions that you can take. So now we're close to $10,000 in just 2 items. And you've got meal and entertainment, taking out guests, or going out to eat with friends and family. And you could talk about business or introduce your business to them. Now you get 50% deduction on those items. A big one is hiring your children. If you've got children ages 6 to 18, well, the IRS allows you to hire your family as employees of your home business. And they can earn up to this $6,100 per child.
Wow, it went up. I thought it was. Isn't 5? It's 6,100.
Yeah, $6,100.
Mm.
So they get the same. They get the same standard deduction.
And that's tax free.
$6,100 per child. So if a family's got 2 children, they're already spending money on soccer. They're spending money on band, cheerleading, football, anything that child needs. They're already spending that money on. They could be spending that money from the child's account that they've put through there from the business. And even with the business, a traditional business, a brick and mortar business, oftentimes the business owner funds out of their pocket to get that business going. You still get to make those deductions. So even if the home business is not generating lots of money, you're still spending money paying people to help you get your business off the ground. So, right there, I'll just stop. We've just calculated close to $20,000 of potential deductions. So technically on line 4 here, we could put $20,000. However, we don't know if you're going to take your home business serious. We don't know if you're going to keep a record of your mileage. We and you don't know if you're going to hire your kids in your business. So we try to be conservative, and we generally recommend that you put anywhere from $4,000 to $5,000 on this line right here. I mean, if you can't get $4,000 of business deduction expenses after what I just went through, a home business is probably not for you.
Yeah, that's an understatement.
Potentially, say what?
I'm not saying the home base is not for you. That is true, but I'm saying that 4,000 is an understatement. And I wanted to, before we even went any further, I want to make sure I do some clarification on some of the things you said, because some people may be still stuck on a couple things. So, one, I want you guys to know one of the reasons we use our systems, okay? And what he said was, even if you have another business, we have a cash flow manager, which is a $9.99 phone app that and website that allows you to put your expenses and receipts inside of a system, so that you don't have to try to figure out these different percentages and percentage of your home and all that good stuff. You just put it in, and the system will help you with that. But also, the way the questions are asked in the cash flow manager, they ask you what the IRS would ask you if there was an audit, which would pretty much bulletproof your tax records. And that's one of the key things. And he talked about those mileages that he's talking about deducting. Well, if you do not track your odometer, which is what we show you how to do, we have that system, and we're actually going to be creating a GPS feature in the phone. If you don't do that and you get audited, those deductions for your car do not count. Okay? And you could go to Mileage Rec too. If you don't track the mileage personally like that, there you could just use the standard mileage form that the IRS does. If you want to do it easy as you're trying to learn everything else in your home-based business, you don't have to super confuse yourself. So you could do that. Another thing I wanted you to realize is you can also use a CPA after you have this tax flow manager. You have all your receipts to who, what, when, where, why, all of that good jazz. We show you how to do that. You can print that out. Now the conversation with your CPA, first of all, they don't need a bunch of receipts. The IRS doesn't care about a bunch of receipts. They want to know what was the purpose, who was there, and why. But once you do that, I strongly recommend dealing with a CPA that is a home-based business owner or has been. Because just because you're a CPA, I say this all the time, this does not mean they know every deduction and know how to get you to pay the right. I will always use a CPA or tax preparer that is in my econ because I know what type of education they have. I don't want them to just have the standard CPA education. I want them to have the business owner side. So that's something personally, but you definitely make sure you have the right person. And I definitely, you can start learning to do your taxes yourself, but in the beginning, you might want to get with somebody that can help you with that. Another one is I just learned from the owner of my econ. I thought that your children, and this IRS does say that your children at ages 6 to 18, but Ivy actually showed us that you can actually hire your child earlier than 6. The way you do that, and now you have to do this correctly. You know the Gerber baby? Well, that baby's not 6 years old, but that Gerber family is paid. The Gerber baby is probably 50 years old or 60 at this point. But anyway, you can hire your child as a model. Some of my frat brothers and some of the people I know have some of the most beautiful children. And even if your child is not, well, every child is beautiful. Let me just put it that way. You can just take pictures and put them on your business card or put them on your website. Say something like business so easy a baby could do it or something like that, or have them dancing and use them in marketing, whatever you want to do. But you can hire your child also as a model. Let me tell you a couple things that this does. Let's say you have 2 children. One, you're starting to build income for them in their social, okay? We're starting to help build their credit and build their profile and their employment history. Then 2, you're creating this business that's not just a home-based business to where you're separated from your family. You now include your family, which now gives you more time with them, and you're educating them on something that's going to change it could be a generational curse that you may be dealing with, you may or may not, but it could shift the way they deal with finances, and you can always make it fun. Have them doing fun stuff. They're holding the camera while you're doing your videos, or they're helping you learn the taxes, or they're doing your Facebook post, whatever you want them to do, but have them do an assignment. And then you might want to check out the video that I did with Ivy Stokes, the owner of my econ, on how to have your child become a millionaire by 18. See, we were talking about $6,100 that you can write off tax-free. Well, you only have to invest, I believe, I don't want to quote the amount, but it's not as much as you think. But 18 years of investing monthly and a compounded interest on some of the things we show you at around 8 to 10% a year, and that does exist. You just have to deal with the money managers, not financial advisors, but money managers like T. Rowe Price, etc. Those companies allow you to get a higher yield, and if you can get that and have that for your child will be pretty much well off before they even know that they have this account and it exists. The key to it, Ivy always says, is don't tell them that they have this account. Do not let you know that they're worth $500,000 or $1 million by the time they're 18. Okay, just keep it and put it in a trust or a will. But I know we're getting a little off tangent, but I wanted you guys to understand just the power of that one line could really change your financial outlay as well as your families. So, Eric, I'm going to shoot it back over to you. I just wanted to make sure they got those couple points.
Absolutely. Those are critical. So, continuing on, line 5 says, add lines 3 and 4 and enter the total. So, lines 3 and 4 would mean we would have $7,900. Line 6, enter an estimate of your 2013 non-wage income. This is income.
Hold on, Eric. Number 5, that I want to share on your Schedule C or your 1040, and if you look at Pub 505, on your 1040, they, on the average person 1040, some of them are different in different states, but those are items, I believe, 22 or 26 to 30 something, and in those, with those allowances from those adjustments, some of those are your student loans, your health savings account, your what are some of the other ones that are on there? I mean, your business deductions. There are a lot of things on there that a lot of people skip and miss out. It can also help increase your deductions. So, Eric, you just put the $4,000 from business expenses, but if they have student loan interest and those other things, that actually can go up. So let's take that up a little bit, because we have other adjustments in that, and I wish we had that document, but we can definitely show people that document. But it's basically 1040, and if you go down, it says adjustments to income. any of those that you have that qualify can increase that. So conservatively, let's just say instead of 38, let's just say another. Let's just add another 3,800, which will be one more exemption. Or you know what? Let's keep it conservative. I'll just say we're going to keep it just in business. We won't even add to that. We'll just keep it where it is. But just know that most likely it'll be higher than that. But we can continue.
Well, and this is one of the things. Again, I mean, this is a person's form, and this is we want people to understand all those things. But what I'm sharing with you is how I help my clients as far as what I recommend to them. Now, one of the things I make clear, I am not signing this W-4 anywhere. They are. So they need to know everything that they can take, and that's why I try to take the time to explain and show them the deductions, and we go through the Schedule C and show them all of that. This is where they can put their numbers.
Right. Okay. Right. So we'll leave it at 4.
If they want to put 20,000 or 30,000, this is their numbers.
Right.
What will happen though, like you said at the beginning, your W-4 is something that you want to continue to do every year. When you start a home-based business and you see that you really got it and you take advantage of everything available, then when you finish 1 year, you're going to get a big refund. And then you're going to get the idea that I don't like big refunds. I want all my money now. And it's going to get to a point where you can't help but get a refund unless your business is making so much money that it's okay to be paying taxes in. Your home business plus your job. If your home business is jamming to the point to where it's making so much money, you really don't care about paying taxes in because you got to use all your money all year long. I mean, that will be a mind shift that you'll experience. But starting off, once we see that you did really take advantage of everything, then we'll go back and adjust those numbers, and then they're not estimates anymore. They're facts. So right now, what I'm suggesting to people is it's just an estimate. Because what I don't want is for someone to say, oh, okay, I'll do this and I'll do that, and then they owe the IRS a bunch of money, and they say, well, you told me to take it. And then I'll say, did you work your business? And then they'll say, well, I tried. We don't want all that.
Yeah, well, I don't want people to get afraid from what he just said. Even if you, even like again, when he says work your business, all that means is be an intent to have a profit, and you're still going to get $3,800 just from your home, your cell phone, and regular stuff. The stuff that just doing your normal activity.
Yeah, this $4,000, you should stumble over this and get $4,000.
What he's saying is if you go and put some 15, 20,000, something like that up there, that's a different ball game. So you're safe. Everybody that has a home-based business is going to. I mean, just with your monthly from your website, you're going to probably be at around $500 to $600, and your cell phone is probably $100 or $50 to $100 a month. So you can easily get up to that. And I want to share this one quick thing. One of my best friends, he's top producer in a MLM, and he makes about 70, 80,000 a month, and he's made a million last year in his home-based business. Now, he actually contacted me to get on a three-way with with the owner of my econ because he wanted to make sure he paid the least in taxes, legally and ethically, of course. But one thing he said that was very powerful. He said, Ed, I love that tax cash flow manager you guys got, because anybody in any home-based business, one of the biggest problems, I don't care what business you're in while you're watching this or what one you're thinking about joining, one of the big issues you have as a leader or as a team is retention. You got somebody in 2 weeks they quit, in a month they quit, in 3 months they quit. Well, that's why we want to get them educated on the tax benefits and have them have the cash flow manager at least, because if they have that, this is what he told me. He said, because if they have that and they understand that their $500 cost for the year is about $2,000 to them in actual cash from their tax savings, then they won't ever join the business, which will keep your retention high. So
They
as
won't
you
ever stop the
leaders or
business.
people that are joining, yes, sir.
They won't ever stop the business.
Oh yeah, yeah. They won't. Even if they aren't making a lot of money, they're still going to be making a profit or increasing their cash flow from just the tax side. But we have to educate them on that, and we never want somebody to go back to just getting taxed, overtaxed, and missing out on getting closer to financial freedom. We want to make sure we educate those individuals. And if it's not our tax manager, make it some tax manager, but make sure your people understand the tax benefits in some way and they can keep easy tax records. So we are now on which one, 7 or 8?
Line 6, enter an estimate of your 2013 non-wage income, such as dividends or interest. And this is if you've got investments, investment properties, money that you made that was outside of you having to physically go and do labor or sit at a job or do something. This was income that you made from your money making you money. And
That's
you would put
definitely
that
something you
there.
want to get to. If that's 0 now, we're going to change that.
Absolutely. And most of the people that we've talked to that are W-2 wage earners that have the W-2 mindset, they got into my econ because they now feel the need to change that. So right now we're going to start with 0, but we know that we're going to come back next year and we're going to change that number. So line 7 is subtract line 6 from line 5. So we're going to carry our 7,900 down to there, and then we're going to divide that number on line 8. Divide that by $3,900. So we're going to take 3,900 and
divide that. While you're doing that, that 3,900 was 3,800 last year. And like I say, they make these little changes here and there, but they may change that to 4,000 next year. We don't know, but that's one of the reasons why you want to fill this thing out, every year.
So that's going to give you 2. Enter the number of personal, divide that number, drop any fraction. So that number is 2.0. So we're going to put a 2 right there. The allowances that we had on our first page, line 1, number H, if we were a single person that went from probably claiming single and 0, we had 2. On the first page, we would have 2. Now we would have line 10, add lines 8 and 9, and we would have a total of 4.
So we just basically doubled what we would have had.
Or quadrupled if the person was claiming single and 0.
Right.
And so then what you want to do is you want to go back to page 1, and you want to go to this section, the employee withholding an allowance certificate, fill in your personal information, and you get to line 5. I mean, the rest of it is self-explanatory, but line 5 is total number of allowances you are claiming from line H or above or from applicable worksheet on page 2. And this is where we would put 4. So we're going to have single, 4, or married, and more. Any additional amount you want withheld from your paycheck, that amount should be 0. And then you fill out the rest of it according to the information that is asking, sign in, and turn it in. So it actually should take you all of about 5-10 minutes, although we went into quite a bit of detailed explanation. The W-4 is not that big of a burden. It is a very important document, but it's pretty simple.
Well, Eric, I want to thank you for your time. If you guys want, the cool thing about having this videos, you can always go back. If you also want to fill this out and then compare it, there is some information on the IRS's website that can help you in filling out. I like to, and Eric and I both like to show people on here because the IRS website doesn't necessarily go into the business deduction side, but it does have some information if you want to just, if you're a little uneasy, you want to just kind of check that out, you can also do that. Now, so you might want to get back with whoever invited you onto this call, regardless of what venture they're in, and just one, thank them, and then two, see if there's a home-based business that could be good for you. We're also going to do another hangout that goes over the common tax deductions in a home-based business. That's going to be probably the next hangout that we're going to go over, so you know some of the things you can write off and some of the resources that we have that we are making available for people. So at the end of the day, it's really up to you what you want to do with your finances, but there are options available, and we are a personal financial success company that shows people exactly how to do just that. So I want to sign out. Thank everybody for your time. Give back with whoever showed this to you, and also, if you like this, like it. If you feel like this was some value, we would appreciate if you comment on it and or share it. Really get this word out to more people. So if you got value from it and learned one thing that you didn't know prior to listening, comment and share the video.
Thank you very much.